Alright, so today we're gonna go over market maker models. So this is kind of an example of a buy model. So over here on the left we have the sell side, right? And then you get the smart money reversal, and then this side's the buy side. So in all market maker models, you start with by having this original consolidation, which usually has a high time frame key level or range high resting above it. Then you have the first distribution phase, the second distribution phase, and then a smart money reversal. So in order to classify a smart money reversal, you need two things. First, you need a SMT, so NQ with either ES or YM, and then two, a change in state of delivery. So, and the SMT has to be inside a high time frame key level or liquidity sweep, right? Because price moves from internal liquidity to external liquidity. So say this was external, right? The range low, then we would target some type of internal up here, okay? So once we get the smart money reversal that we confirm with the SMT inside a key level and a change state of delivery, the next thing that in a market maker model, that will be a model you'll get your first entry, which will be the low risk buy. After that, you get your accumulation 1, and then you get your accumulation 2. And this accumulation 2 also includes a silver bullet, which is the highest probability entry, and it has to have an SMT inside of a fair value gap right here. Alongside, so how to enter on this buy side of the curve, okay? What you do is you take the mitigation blocks from this left side of the curve, and then you pair it, so mitigation on left, pair with Peter array on right. So some type of mitigation in here or a breaker, and then on the right side you look for a fair value gap in here, and that's how you enter. So the same entry would be on here. You'd find this mitigation block, right? Go to the right side now. You get your fair value gap right here. So bullet, enter until you target their original consolidation, okay? And then other things you can do is if you take the fib tool and if you fib the whole thing from the range high up here to the range low, the smart money reversal, so original consolidation to the reversal. If you go ahead and add the 0.25, there's 0.5, and the 0.75, no background, okay. You can expect, on the right side now, you can expect the first accumulation to happen, first stage accumulation to happen on the 0.25 of the dealing range, and then you can expect the second stage accumulation to happen on the 0.75 of the dealing range, okay? So this would be first stage, okay? And then another thing that you'll notice is on my drawings, I always have a liquidity sweep, which is your turtle soup entry. You'll notice like almost every single time as we leave a range, we have to sweep the range low to go to the range high, or the range high to go to the range low, okay? And then you have your time frame alignments, which I have right here. Okay, so your monthly PD array, which would be right here, what you're entering in to frame this market maker model, the buy side of the curve, okay, is a monthly PD array to a daily market maker model, weekly to the 4 hour, daily to the hour, H4 to M15, H1 to M5, M15 to M1. So I'm gonna go ahead and show you an example now. So on the daily chart, I have it marked out, but for the smart money reversal, it'll look cleaner on the 1 hour chart, but on the daily what you have is you have this down closed candle and an up move, which acts as your bullish order block, or this is also a mitigation block, and then you also have this liquidity sweep, right? So you also need a SMT here, which I'm not going to look because I already know that there's an SMT here, but that will qualify as a smart money reversal, okay? So then on the hourly chart, let's go ahead and mark everything out. All right, so this is your market maker model. So you have your original consolidation up here, which is your range high. I have not fibbed this, but we can kind of go ahead and fib it right now. Okay, so then you have, this is your distribution 1 leg, this is your distribution 2, your smart money reversal. Okay, so now how do you get in on this buy side of the curve, right? Which is the side that you want to be trading on. So your first entry would be, so you have this mitigation right on the left side of the curve. If you drop down, now first you got to confirm the smart money reversal, right, with the SMT, and then you get the CISD once you close right here. So now you're looking for this low risk buy, right? If you hop down on the 5-minute chart, which we go from the daily to the hour to the 5-minute, personally, that's just how I trade. That's my time frame alignment. So we go over here to this, where we have everything. To get this low risk buy, here's your 5-minute mitigation block on the left side. So now you pair it with the right side. Well, you see you got this small gap on the 5-minute chart. So then that would be kind of your entry for the first low risk buy. I personally don't suggest getting in there. I like getting in either on accumulation 1 or accumulation 2, because accumulation 2, the silver bullet, is the highest probability trade that you can get. But anyways, if you go to, after that, we marked out our MMXM range high to low, and you have your 0.25 level here, which coincidentally you have accumulation 1. I don't think it's a coincidence, but either way, your entry now can be here's your distribution leg, okay? That's your mitigation block on the left side. You get a retracement down into this FEG, and then you create this fair value gap. Now, where do you create it at? You create it at equilibrium, right? But you create it in the same mitigation block on this left side, which is how I taught you earlier to create your entry, right? Use the left side to get on the right side entry. So now you take your entry into this gap, right? You basically get no drawdown wherever. Okay. So now we want to get in on the second entry. Say you want to add a position, or you miss that, go to the next day or whatever. Because you can trade this one market maker model in multiple days, and then like this is another market maker model inside the higher time frame market maker model, right? But then for your second entry, here's your distribution 1 on the left side of the curve. If you go ahead and draw that out, right, you have now on your right side of the curve, you have your 0.75 level, which is where I said the second distribution likely forms. And then you have your right side of the curve PD array right here. PD array, your fair value gap. So then your entry also just here, once you get the SMT, because you need an SMT, thankfully the indicator that I have shows SMT, so then you enter and you just target the top of the consolidation. And that's pretty much just a basic rundown of market maker models. I can definitely go more advanced and show other examples in later videos, but for today, that is all.